For the last three and a half decades, one has seen global AMCs come into the country. Some of these marquee names have not been able to make their mark in this country. I'm going to be talking to somebody today, has been around for quite some time, has grown organically, has one of the largest retail footprints in the country, has had no change in shareholding during its tenure, and more importantly, no inorganic acquisition.
This is Swarup Mohanty on MF Chronicles.
My father's generation came from a very insecure India. There was a craving for safety. Because of the interest rates were such in the form of FDs was something which was giving them enough for them to move to an unregulated world where returns were a factor of the market. My generation, which started taking to these products because we wanted a little bit more from life and a little bit more of return. So we moved to capital markets.
Happened to ask one of these global heads in one of the conferences, you're not making money here and your AUMs are not growing, why are you still here? So he told me, India mein aane se uska share ka bhav badha hai.
You cannot not be in India is also the truth. When you look at it now and bringing the story to now the data points are beginning to unfold.
Interesting. You were also mentioning a Korean mindset.
Very interesting conversation that I had with our chairman and founder, Mr. Hyunju Park. He would say that, you Indians are better at maths, but we Koreans are better educated. You have better brain, but we'll achieve more. He went on flip-flopping and I asked him, how can you flip-flop? He said, he summed it up very well, saying that you Indians are very emotional. You're always in yesterday. We Koreans destroy yesterday.
Welcome to another episode of MF Chronicles. Over the last three and a half decades, one has seen global AMCs come into the country. What they promised has been strong processes, new product ideas, greater dispersion of knowledge. But somehow, during this tenure, most have actually not stayed the journey. For one reason or the other, it has just so happened that some of these marquee names have not been able to make their mark in this country. Having said that, there have been some with joint ventures which have actually done really well. So what is the conundrum? What is the paradox? Why is it that you have a global firm with the same DNA not being able to do well on its own, yet with a JV does extremely well? By the way, why I'm hinting at all of this is because I'm going to be talking to somebody today who heads a standalone global AMC in the country, has been around for quite some time, and more importantly, has grown organically, has one of the largest retail footprints in the country, has had no change in shareholding during its tenure, and more importantly, no inorganic acquisition. I thought it is best to invite the MD of the firm to come and talk to us, Mr. Swarup Mohanty, who's today going to unpack this entire black box of what it takes for a global AMC to survive and thrive in this country. Thank you so much, Swarup, for coming here.
Thank you so much, Vikas, for having me. This series is doing so well. It's a matter of honor that I get to feature on this series too.
Thank you so much for your kind words. I think MF Chronicles has been actually created through anecdotes of professionals like you who can see the industry. You all have seen this industry grow from various vantage points. And we've been in touch over the years, and I've been a great admirer of how you and your senior management team have built this company from scratch. And we will talk about that later. I'm very keen for you to share some of the insights in terms of how you led the turnaround of Mirae. But let's just start off. I just talked about the fact that a lot of global names came into this country, and not all of them managed to survive the journey. Okay. What do you think was, if you could just give us some insight, you had a ringside view in terms of these global AMCs. What do you think was the landscape in which they came in? And let's just go back a little bit in time. Let's go back to the Morgan Stanleys of the world, if you will. So, Swarup, I wanted to ask you, when global AMCs first entered India, what aspect of the Indian investor or the Indian capital markets landscape did they actually underestimate, if you will? If you could just throw some light on that.
I think at the outset, no name, no promoter, no business comes and sets up business with the thought that it will not grow its business. And when you look at things in perspective in those earlier days, this was the country of potential. It was always a young country. It was a democracy. I think what people sort of found it very different I can speak from our perspective, is that, the diversity of the country is something which takes some time to understand. That one strategy does not fit one country. It takes some time to people to understand. The second was the behavior of the people. Even today, if you look at the basic Indian, it's kitna deti hai. So in India, especially from our business perspective, it is about returns over process, right? While if you look at any global name which has survived this many years, it's more process than returns, and that's something which India now has to wake up to, right? It's not that they are wrong or we are right, but each to his own. And the third, I think, the regulatory framework is very different from the rest of the world, and rightfully so. Our regulator caters to us. And most of them come with the fact that if it's happened in the large country, it will happen or has to happen in our country. Some of the regulations which cater to protect our fund management unit and all were a little different from what happened in the Western world. And I think these were three very unique things to the country, which required either a change or an adaptation or a realization. If you are in India, you have to be an Indian. I mean, you can be a Korean in Korea, but in India, you have to be an Indian. And I'm very lucky that at Mirae said that acknowledgement came very early. Otherwise, when you look at, as you rightly said, it's not been a very happy hunting ground for global players.
No, interesting. And again, I'm just talking about the pre-2000s,
Correct.
the mid-90s. And of course, I often talk to people, and thanks to social media, one of the benchmarks has now become 1992, the Harshad Mehta thing. A lot of people talk about that. But if you look at the capital markets, I think it was more NFO-led or IPO-led at that point of time. I don't know whether you remember the number of IPOs which were hitting that. Kitna deti hai, I think is it's so true, na? Even in that I think recent Maruti ad.
Yeah, it came from the
it
Maruti
just
ad.
came- yeah, absolutely right. You're right. And of course, product more than process. I heard you speak a while ago in which you talked about moving from product to returns. You were saying something, right?
No, from a brand to a product.
From a brand to a product. So I think in those days, product was very important and FD was very important.
True.
Yeah? So what do you remember of that time, that investors landscape out there, and just put yourself in the shoes of a foreign AMC coming in, ki ye kya ho raha hai? मैं क्या देख रहा हूँ? Do you remember any insights which you would like to share?
Yeah, I started my career selling FDs, so I come
Selling
from that
FDs.
background.
Oh,
Yes,
so tell us
yes.
some more about that.
But it's very interesting when you look at that phase, and primarily two generations investing as the underlying. Of course, at the beginning of the journey of the industry, it was very institutional based, very debt based, and I remember 70-75% of industry AUMs would be corporates and institutions. So the products were mostly on that side, and the playbook of any AMC at that point of time was to build debt as the first stage and then progress to the longer assets, as we call it. But when you look at the other side of the story, non-institutional, I think the underlying was two parts. It was, say, two generations, which I can simplify by saying that my father's generation and my generation. My father's generation came from a very insecure India. And then most of them would have these long one single jobs, and there was a craving for safety. And to be fair, because of the interest rates were such that the returns being offered to them in a fixed income regime on a defined manner in the form of FDs was something which was giving them enough for them to cater. For them to move to an unregulated world where returns were a factor of the market is a process. I think it's my generation which started taking to these products because we wanted a little bit more from life and a little bit more of return. So we moved to capital markets. And that was a fairly long time. I mean, between the 90s, that grew up to 10, 12 years, I would say. And still, there are so many people. And in India, if you see, the bank FD still outweigh mutual funds by a big margin. So it's that landscape which completely was very different from the landscape they came from. Their landscape was completely market driven or financial assets driven. And then that adaptation probably would have taken some time, I think.
In a way, I concur with what you're saying, because I think at that point of time, ULIPs were like 70-80%
Yes.
of most of the financial assets which were going.
True. It was ULIP at the end of the day.
It was Unit Trust of India.
It's just that when you look at that part, and when the term plan first came, that people started differentiating between insurance and investing. Those days, insurance and investing were one word.
Correct. Very interesting. And, again, from a global AMC point of view, there are a lot of best practices global AMCs do bring in, right? In this intervening period or in this initial period, if you will, when we are talking about these AMCs setting up shop in India, which of these processes or which of these best practices do you think got disseminated well within the Indian ecosystem and which actually needed a bit of adaptation?
I think the first, as you rightly said, I think this is a business of process. And over a period of time, process prevails, is something which the global asset managers brought to India. That this is a business of risk and not return is something which they emphasized. And the initial, in those days, if I were to go to the regulatory framework, the amount of impact they had on what became the future risk models of these the fiduciary responsibility, I think you have to give a lot of credit to the global asset managers. They emphasized on the back end of risk being in place. I'll give a small example. I mean, for us, say we call it the temple of our business is the dealing room. The fact that a non-employee of fund management is not allowed to dealing rooms was something which was instilled by me very early then, because of the practices which the foreign players brought into place. Now there is a biometric where you are not allowed, right? In those days, there were no biometrics. But if I am from the sales function, that I am not allowed into the dealing room perpetually is something which we didn't know. But the global players told us this and made us understand why it's important, more important. I think the whole thing of the importance of the fiduciary nature of this business was I think got to India by the global players, and we have to always remain thankful to them for putting that framework in place. See, this is not an industry which was born in India. It's an industry which we have imbibed from the West, and they are still a good 20-30 years ahead of us. So I suspect we'll continue learning from them in this aspect.
You still think they're 20-30 years ahead of us, or has the gap narrowed?
Yes, still, because the products they are talking about and the products we talk about are very different.
Interesting. One of the things probably I realized when I was working for a global firm was the speed to launch something, the speed to react to something was far more with nimble-footed Indian players or JV players than with the global players. Was that an advantage or a disadvantage? In hindsight, what do you think it was?
No, see, I mean, I'll say that from my experience. Sure. And I came to Mirae Asset and I was told that this is a business of track record. This is very alien to what I stood for. I stood for what you said, launch products, right? And when you look at it in perspective, you put a good product, build a good track record. That's when your inflection point happens. And look at our journey. Suppose just reflecting on what you're saying, I joined in 2011 at 464 crores. Before COVID, we were just 40,000 crores. But by that time, we'd crossed 10, 12 years of track record. And now we are 230,000, which is 4 times of where we stood. But the inflection happened only with track record, not with more products. Before COVID, we were hardly any products. But this process over new product is something which we firmly believe in. And I was discussing with you that, I was told that our asset gathering will happen in 10 years' time. That thought that you can sit for 10 years without asset is something which is so ingrained in large players, is something which is very different to what we are as a player. I mean, not saying this is right or that is right, but we need a more instant gratification kind of setup than their thought. Very different thought processes. But if one can marry the two, I think something very different can happen.
It's an interesting thing, and there's a little bit of a paradox in my mind on product especially. Yes, of course, you can do it to death. You can launch multiple products and just hope that some of them survive. The flip side to it, which I've heard some global players tell me, is that if they would have launched a few more products a little bit earlier, the inflection point would have come in earlier. Like the balance fund category, for example, Alliance 95 was the one which actually took it forward, right? So what's your view on that? Is there a trade-off somewhere midway, or would you want to again talk about the fact that fewer products, larger track record is something which will ultimately be the norm?
So I look at it a little differently, and this is what Mirae Asset has taught me, that you launch a product when you have the capability. Right? Because finally you can launch it. Launching a product is very easy. I'm a sales guy. I can launch a product tomorrow. But if you don't have the capability to manage that product, then it catches up today or tomorrow. So for us, we launch a product when the fund managers give us a go ahead. Yes, we have the backend, right? And then that's the journey we have taken. But if you look at the country now, the largest fund is a single fund, right? It defies all that. Finally, it boils down to your ability to manage that fund consistently over a period of time. And then, so while as a salesperson, I am for launching products, but the fiduciariness then taught me that if your backend is not in place, then don't launch a product. Alliance 95 is a product which was superlative at its point of time. I mean, the performance of that product is just phenomenal for us to watch from the outside. I watched that product from the outside, and then it did put what it said. It walked the talk, right? At the end of the day, that is what it is. If you don't have the backend, and every product needs a very serious backend.
Very interesting. You know, even as I'm talking to you, there are so many pushbacks which are coming to my mind. But this is a very interesting discussion, and I think we can talk about it for a longer period of time. I think as ex-sales guys, both of us will always have a natural affinity to discuss products a lot more. But since we're talking about sales, I think one of the things I personally feel global AMCs could have done much better, standalone global AMCs could have done much better, was probably in the distribution piece. Okay. Do you think that they overestimated the quote unquote organized distribution piece a little earlier than anticipated and did not go to the IFAs? Or, you know, I mean, they thought that the products were a little too mature for the markets, and they would rather let it marinate and seed and then grow over a period of time. What do you think would happen?
This part I agree with you. It's no one strategy fits all. I mean, the banking industry is great in one part of the world, does not mean that it is the end all for this part of the world. I mean, each product has its own strategy. And if you go back to those times, and we've both been in the market, this was the only industry where everybody has one sales strategy. If you think of it, okay, you start with the banks, you raise some liquid fund money, and then after that you start going to the individual advisors, as you rightly said, was not considered in vogue because they are agents in those days. But to be fair to that part of the market, between the so-called agents now and the quality of those people now are completely different.
Yeah.
And then I think we thrive on that side of the market. And I think a lot of our success I will attribute to them standing by us. Because I again go back to my favorite writer called Mr. Nick Murray. And Nick Murray always says that owner-driven advice is superior to organization-led advice. When you sit in front of that individual, the decision is taken on the table. You are meeting the decision maker. Right? Here there is a process, and more often than not, your funds may not fulfill the process. Right? If there's a 3-year track record and you are sitting with a new fund, you're not going to say. We were lucky that some banks actually approved one of our products ahead of time. And that's how we got our first approval in the banking segment. And we come from the East. So we don't come with great global tie-ups with anybody. In those days, even today, we don't have any large footprint of Korean banks in India.
Yeah,
true. A lot of the Western funds came with those approvals from their country, which was got down. So it was a natural instinct to do that. But neglecting this side of the market was something which I wouldn't have done. Anyway, both of us have grown bottoms up in the market, so maybe our views were a little different. And yes, there was no compulsion on us to follow that strategy. But what you said is absolutely correct. When I reflect back, I had not thought of it. Thanks to you for saying that. I think that's something which should have been done much better.
In fact, one of the global AMCs, which I don't want to name right now, actually, for reasons of their own and right reasons of their own, cut down on the number of IFAs and distribution partners which they had at one point of time.
I know, I'm aware. I mean, I can name 2, 3 also.
Yeah.
But good for us.
Good for us. Yeah. It's fascinating how different global firms think differently and how they look at the market differently.
Exactly the point. See, they come from a country which is very homogeneous. Look at the western part. The diversity that we have within our offices is something which is unheard of there. Maybe now Dubai has that diversity, but apart from these two places, that in my office I can speak 4 or 5 languages, is unheard of there. I mean that in the year this office will celebrate 6, 7 big religious events is something which is unheard of them, right? So similarly, the distribution is also not homogeneous. But to be fair to the discussion we are having, this part of the market, which is the individual distributors or the MFDs, have not only maintained their share over the years, have also grown their share.
Oh, yeah.
I remember, we go back to one organization together. In that organization, as a head of sales, when I first asked for pricing to be at par with the banks, there was a fair amount of pushback. And I said that the banking head is taking the same target as I am. Then why won't I get the same pricing? So in one of the funds, for the first time, the individual advisors and the banks got the same pricing. And that, to me, was a very different way of going out to the market and talking to our distributors, because our pricing is ek hi hai, But earlier, there was a differential in pricing between the banking part and this part. But it should be on who gives you money. I mean, who's premium to you? The person who treats you as premium is premium to you. Okay? If some part is treating you as premium, then why shouldn't the pricing be premium? There is something which we argued. And thankfully, our bosses also agreed, to be fair to the bosses, right?
No, just took me down memory lane. I think if you look at the same MFDs, they organize themselves in chains, in blocks.
True,
I think the bargaining power became that much more. And I'm so happy to see that quite a few of these MFDs, we used to call them IFAs, now
Yeah.
MFDs, they have now actually upgraded themselves to selling alternates, becoming a very powerful force. But just to circle back, and I'm going to be pushing a little bit more to read your mind on this. I've been talking about this lumpy concept called global AMCs, and you've been picking up a sliver called Korean AMC. Now, and you also mentioned West, right? West, there is America, there is Europe. American AMCs behave very differently from European AMCs. So, if one has to ask you to wear the hat of an American AMC or a European AMC, and when you're looking at the Indian markets, okay, versus that from the East, what are the differences you will find in the Indian landscape? Or what were the differences you would have found? I'm just asking you to put on your thinking cap because you work so closely with these global AMCs. What are the changes? What are the things you're looking at the landscape and saying, this works for me, this doesn't work for me?
In those days or today?
Mix of both.
Yeah. I think in those days, it was very difficult for an American AMC especially, and to come and see the small size of our market. I mean, look at their sizes and look at our size. And they did wait. I mean, some of the organizations have spent 20 years in India before exiting, right? And that's not a small tenure, to be fair to them. But I think the first thing that would have hit them once they settled or set shop was the smallness of our market. And I think more traditional nature of the market, not wanting to grow as in a brisk space on product innovation like their markets.
Correct.
So I think at some point of time, and if the balance sheet is not matching up, then they will say, is it worth spending this kind of time for this much of output? Is a very natural sort of thought process, which did happen in a lot of things. In a lot of AMCs which would have gone out, you have to look at it from a balance sheet perspective also. And there, I think, when you look at 10, 15 years and a balance sheet yielding this much, I remember in one of the organization, I'd ask you, he said maybe in 30 years, this AMC would not match our wealth outfit in Canada. So we're talking about 30 years, right? But that's this business, right? You have to sit and sit and sit. People who sit it out then finally take the pie, right?
Interestingly, I happened to ask one of these global heads in one of the conferences that considering, you're not making money here and your AUMs are not growing, why are you still here? In one of those impetuous moments. So he told me, and I quote that in Hindi because he told me a very different thing. वो इंडिया में आने से उसका शेयर का भाव बढ़ता है globally. So have a presence in India actually boosts their overall thing, that they have an outpost in the fastest growing market, however small it is. And then you do the whole 30-year-old story. So it works for them.
No, but that was true for us also. I mean, sorry, I have to get it back to the Korean story. Because I was told in my interview that we are emerging market experts. That was our tagline then. By virtue of that tagline, one dot in India is given. I was told in my interview that one dot in Mumbai we have to have to fulfill that tagline. Whether it's 1 or 30 is dependent on the Indian team.
Super.
But you cannot not be in India is also the truth. When you look at it now and bringing the story to now the data points are beginning to unfold. And financialization of assets have started. So what can happen in the next 10, 15 years will not, I'm not saying may not, will not have any correlation with what's happened in the last 30 years. That's where you're set. So coming to the last question, if I were a player now, how I'll view India, I will not look at the track record of India and look at it as a fresh start for me. And that's the strength of our data points as we stand today.
Interesting. You were also mentioning a Korean mindset, right? What has happened yesterday is yesterday. Does that play out right now? What was the thing we were talking about?
No, I think it was a very interesting conversation that I had with our chairman and founder, Mr. Hyunju Park. And he would always he would say that you Indians are better at maths, but we Koreans are better educated. You have a better brain, but we'll achieve more. He went on flip flopping, and I asked him, "How can you flip flop?" He said he summed it up very well, saying that you Indians are very emotional. You're always in yesterday. We Koreans destroy yesterday. And lot of our inability to look further is because we are caught in the past. It's like that risk iceberg. We see a little bit, but what is not seen is so the more you can see for the future is when you let go. Letting go is not easy, especially for emotional people like us. Some of the discussion with my mom last week was we were discussing things we were 50 years old. He said, I can't forget, but that's what we are, right? But the more you let go, the more you'll be able to see the future. The more you'll be able to see that this country now has 60% of world population under 30 who are economically superior to what we were. I talked about two generations. What changes everything is the third generation. While I pushed for the capital markets, look at the third generation. There, what can I say? Economic instability or whatever is taken care of by the parents' generation. Their lure towards more risk-taking ability is taken care by the grandfather. They are free. They're economically superior knowledge-wise. They beat both this generation put together. And hence, they will approach life which will have no correlation with both our lives. And if you look at that data in absoluteness, then your strategy may not have any correlation with the strategy so far.
Interesting. I think this is also playing out in terms of global AMCs.
Sure.
Even if I talk about the East, you had a Daiwa and a Shinsei moving out and a Nippon now coming in very strongly.
Look at that. Yes,
so
yes.
I guess things are changing
Yeah,
very
I think more
rapidly.
Japanese people wanting to come in. I think one of them making
At
a
least they're
place.
coming to the banks.
It's fantastic to see now country looking good for, it's the best time to be an asset manager. And I think more people come, better for the market.
So if you're a global fund manager listening into this, please hear what he said. It's the best time to come to India if you don't know it already. There's a very interesting thing which one keeps hearing about you. Your love for music. You are a music, am I pronouncing the word right? Aficionado? Aficionado, I don't know
It's
what
too big a word actually.
a music lover.
Yeah,
Let's put it
music
that.
lover. Put it that way, yes.
And you love LPs. Before everybody else jumps the gun, LPs here means long playing records, not limited partners, right? And there's a certain romanticism, a certain sound quality, a certain patience you require. The grooves,
True.
the needle, the music. Of course, things have changed quite a bit, but that I think still remains very much part of your DNA. Yeah. Pretty much, I think the way Mirae has been here, right? It's actually been a long playing record of sorts. In fact, we were talking about this some time back. Between 2005 and 15, the number of AMCs which left the country, stopped the music midway, if you will, were phenomenal. And I think not all of them left because of the global financial crisis. There was the likes of ING, Alliance, Daiwa. I've got some names written here. Goldman, Fidelity, Morgan, of course, JP Morgan, Deutsche, phenomenal names. So, what were the strategic realities at the ground level in this period of time? You said you also got into Mirae at that point of time. What are the strategic realities at that point of time, which these AMCs saw, and they responded by moving out of the country? What do you think they were worried about? And what do you think they were seeing at that point of time?
It's not right for me to talk about
Generally, as a
but the
global,
general thought, probably, I expected such names, to be more committed. They are long-term players, right? And to not give this country 20, 30 years is not fair. I accept one name, which is Morgan Stanley, which did give India 20 years. I think should have played a little longer, right? Some didn't come with a long-term plan.
oh,
I mean, some didn't come. I mean, maybe I'm not allowed to say this, but one did discuss with me, and when I saw the footprint and said, "You're probably one of the largest names globally. This is your commitment to India. You're not going to stay in India." And then the other person, very dear friend, we know him. Maybe I'll talk about him off the record. He said, "How you're talking about this name? I recruited somebody from one of the biggest names, saying that if you don't join me, this fund will fold up." He said, "Boss, you're talking about this name, right?" And then if you're a little, unemotional and track the space from a figure perspective, some of the writings are on the wall. But it really is, I have had discussions with the powers to be, that such names should not be allowed to leave the country. They can give so much to us, to the ecosystem, because of the expertise they bring from there. And hence, I've always been a very sad bystander watching them leave. No such names should have left the country. And it's still a great country. It's beginning to happen now. Just a little bit more of patience. Sometimes when you talk of large fund managers, and I always have this saying that, the day you redeem, next day they will perform.
huh.
So don't leave large fund managers very easily. Stay with them. That's true about India. The moment you exit, this country will happen. And it's very easy to exit. But coming back is not easy.
True that.
Coming back is not. When you're coming back, the same name, this country will also remember that day. So it works both ways. But sitting, having a little bit of patience, getting your cost alike to the country, but not leaving the country has more virtues than leaving the country.
I'll circle back to the cost part, but my question was more in terms of the spirit of regulations which was starting to come in. Okay. You had entry loads going off at that point of time, and I think that affected the business model of a lot of players. You had bank distributors suddenly opening up, and this bank-based mutual funds actually started growing really, really fast. They stepped into the vacuum very good, very, very rapidly, if you will. And I think at some stage, because of what was happening globally, being in India was not uh, really a trade-off between staying here and making money. You were too small for too long, and there were other pressing priorities elsewhere. So I think from 2005 to 2015, or maybe 2009, 9 to 15 in particular, regulation, I think, would have played on people's minds. What is your view on that?
See, I think from a regulator of direct plan, especially where they come on shared classes, which is, different investors are, put as per their category. And an institutional has a different share class, which is a different cost. A retail investor is a different share class, which is different. So they already knew that the cross differential. It was not something which was new to them. Yes, that we bifurcated two parts without segregating investors as per their classification is something probably new to them. But it's not that differential share classes or costs were not known to them. That, I think, is, I thought they should teach us that, because they came from that background. And regulatory changes are a constant in the world. If you look at the regulatory changes between UK and us, I think they've been more rampant than us. And when you look back, and whenever we argue with this, with the regulator, they've pointed out with data that every regulatory change has only increased the industry manifold. When you look at it from their perspective, it's crazy. When you go to argue, no, this is probably right or wrong. They said, but this happened, and so the industry became like this, and two sides to every story, right? But I think that I will not sort of agree, because they knew that business. And to be in a fiduciary role and not be open to regulatory changes is fundamentally flawed. Even today, when we sit, that our monies will grow to a certain extent and economics of scale will not play out on costs, is something which is again fundamentally flawed, right? And the only constant that will happen is and then please understand it is somebody else's money, and the regulator is for the investor, not for us, rightfully so. So anytime the regulator feels that the investor needs to be safeguarded by any change in law, they will come and do that, and they need not give us notice. At least in our case, there is a consultation paper. I sit on the MFAC, it comes to the MFAC, then a consult. There is a lot of democracy in a lot of countries that does not happen. But again, coming back to that fact that maybe the balance sheet started worrying, the smallness of the balance sheet started worrying, but looking at the long-termness they always talked about, they should have walked the talk.
Interesting. You also mentioned about UK. Would you happen to know that because of these changes, did a lot of global AMCs leave UK as well?
No,
So
because the market size was bigger, to be fair.
to
be
good
fair.
point. Very good.
See, it happened at a time when a lot of these players had built a scale business.
Very good point. I think it's a very good point. So, Swarup, when you sit heading a global AMC or an Indian affiliate of a global AMC, which is a very well respected name in its own right, and you look at your counterparts, your Indian JV back JV mutual funds or standalone Indian mutual funds, what are the learnings you are gleaning from them? We've talked about global AMCs coming in and putting in a lot of best practices. What are the learnings you're picking up from the street level? I'm sure there's a laundry list, but if you could give us a few which you think has been very useful for a global AMC like yours.
I think I'm a ruthless tracker of such practices, and
I like that.
you learn from each one of them, and everybody comes with their own strength, and what they leave behind is pretty staggering in the marketplace. All of them leave a very strong footprint on business models, number one, thought process, number two, which is a factor of their business model, thought process leading to business model. So everybody teaches you something, right? I think what is common to most of them is the accountability. I think, both that within the global landscape, as a country, you have to stand up and feature within the global landscape is something which I was always wary of. That till the time we were not in the US, the India book was very big. Non-Korea India book was very big. But I knew once we started in US, this book will become very small. So build size before US happens was a very, what can I say, very easy thing that played on my mind. Now, maybe when you look at the rest of the world, suppose the passive part is blooming very much, but since active is there in India, we play the large active book, right? But not to feature in global balance sheets is something which is a no-go, right or wrong, I'm not. Those are business models. You have to make a mark very quickly to survive internally, forget externally. Then comes the external market. I think their ability to stick to their investment processes is something which I have taken away from them very, very seriously. This is, at the end of the day, name is Mirae Asset Investment Managers, not Mirae Asset Sales Managers. That the business and the most important function is fund management. And we always leave it at that. Is something which has been instilled in the system because we imbibed it from there, and they carry it on. And then the last part is, I think, their adherence to the law. I think, and the accountability of not adhering is very high.
This you're talking about Mirae outside in or
Global.
inside
Global.
out? Global.
Global.
Now, my question, again, to just deep dive into it a bit more, your Indian counterparts.
Yeah.
Okay. What are the sort of learnings you would gather from them? There are some tremendously successful Indian names as well, and some homegrown, some joint venture. I track a lot of them. I'm sure you do it even more intensely than I do. So what are the learnings you picked up from them over the years?
I think, see, this is a business apart from the investor, is a business of people. I think their ability to retain and groom talent is something which I've learned from the Indian players. I think it is incredible to see how people have joined at what levels, are still running the MCs, and some of them, I mean, the one coming under an IPO is being headed by a person who's been there since inception of his career. But to be able to retain such talents through various ways, and because funds like us get stuck with our global processes, is sometimes which maybe we should still learn, right? And The fleet-footedness is something which is very Indian in nature. I'm not saying they're right or the foreign are not right, but they're definitely far more fleet-footed, and their ability to do business a little differently within the frame of a law is far more flexibility than, say, I would bring to the table, right? And it's not that something which we are bound by anything, I'm just saying, but the same business, their minds are incredible at that fleet-footedness. I don't want to say more than that, because that would be talking about certain strategies which I'm not allowed to speak of, because it's their strategy. But they can launch products very differently, and in 5 years can think of merging that product somewhere else, and in those 5 years make the best of it, which, say, a global asset manager will not do. Right or wrong, I'm
Pros
not
and cons,
commenting.
yeah.
Okay, but that's the need of the hour. They'll do it, which is fantastic. But I think most important for me is how they've groomed people, how they've retained talent, and at the same time being able to project that talent in this country, which essentially is an industry which is not from this country, is phenomenal to see.
Very well spoken. I think this is indeed one of the points. As a sub point to that, I just want to ask. We talked about fleet-footedness, and let me just say my interpretation of fleet-footedness in a very sort of a narrow way is launching products, right? I think the launch of new product categories, etc., has been phenomenal. Has there been any product category in India which you or Mirae has found smart enough, interesting enough, good enough to actually take it back and replicate in any other country?
No, I think some of the funds which, I mean, see, we are very lucky to be owned by a fund manager. Mr. Park is a fund manager in
Okay.
itself. So it's this part is where there is give and take. I think always. I think what went back is their ability to, a lot of what will happen on the activities globally will be a takeaway from how we manage our active funds, because West has now lost touch of active management. In fact, 2 or 3 funds which are selling very aggressively in Korea are India funds. Luckily, I work with a fund where it's not mandated to have an India fund, but all countries in the world from Mirae Asset are dictated to have India funds.
Okay,
So
that's
it's a
interesting.
dictate, because the chairman just wrote out his allocation globally. It's 50% US, 30% China, and 20% India. 3 countries. There's no 4th country. Earlier, it was bigger in India, but now we see a good opportunity in China. So China has just gone a little overweight, but 20% of our money is India. So a lot of Indian ideas, especially the way I see going forward when activities make a huge comeback globally, will be taken from our active book here.
Maybe I'll just digress a bit for our viewers. Uh, you mentioned ETFs, which is essentially a passive product, and you mentioned the word active ETF. A lot of our viewers would be very interested to know what exactly is an active ETF. You can just
About so much, it's a blend of both. Though it looks like an index, but at the back end, it's still the fund manager involved, and a lot of inputs are taken from the fund, where the rule is made in such a way that the fund manager will continue to make a play.
would an equated ETF be an active ETF?
No, it won't.
It's
It
passive.
can, but stock picking can become. It's equal weight, I think, defies a little bit. It can become, but that's the beauty of rule. You can make a rule on anything, but the beauty of rule is it sticks by that rule. So
it's fascinating. 30 years ago, I never thought I'd be discussing active ETFs and passive ETFs and factor ETFs.
no, we're just beginning.
Yeah,
It's just beginning.
Yeah.
It's just beginning.
Very interesting. One of the other things which I've always found to be, and having worked for a global AMC or two myself, to be a pain point, if you will, whether it's a global AMC or it's an AMC which is largely globally owned, is cost structures. Okay. A lot keeps getting talked about cost structures of these AMCs in India. And there are 2 parts. One is genuinely the cost structures are high at times. The other is certain costs which gets loaded by our global firms. It could be an IT, compliance, risk, software, whatever, what have you, right? Uh, how do you view these cost structures? And what would be your insight in terms of how to manage these cost structures? Not necessarily from cutting point of view, but managing the global counterparts.
Things come a full cycle. I mean, when I used to work for an Indian AMC, we used to lament the fact that global AMC guys were paid more than us, right? But when we got inside them, And when we saw these cross subsidies happening, luckily it's never happened in my career. And in our organization, it's so clear that every business is localized. And because we are young, please, it's very wrong to compare us to any of the large names. We're just 28 years old worldwide. So all these have not started. It's just recently that we built something called a GBU, which is a global business unit. But I see right now we've started cross, subsidizing, or we have a very interesting indexing business in Gurgaon, which create indices for the rest of the world. That cost is shared by the companies. We are like the vendor. So we actually export a lot of cost to the others, right? But finally, say with one of our IT partners, the cost is now shared globally. And luckily, we are not that big a unit so that we are not impacted. But at the beginning of the business, if they are put onto the business, is unnecessary pressure. I don't think that should happen, but I completely know what you're talking about. And in the earlier days, if they're now put onto the local unit without AUM or the ability to grow their income, it can be a big hit on the balance sheet, which is not fair to them at all.
Hit on the balance sheet, and then regulator says, please cough up more capital to take care of it. So
absolutely.
it's not.
That's again additional money, right? I mean, put this at a certain scale. I mean, I'll tell you how Mirae had worked at that point of time, and that's why I'm so appreciative of the organization. I'm always data. In the initial years, we were actually given advisory book from our foreign books to advise out of India. Initially, and we in the first 5 years were given fairly decent advisory fee to support our business. And that was the other way around. Actually, we were being paid, and of course, advice was given, but it could have not been substantiated to the amount it was, right? But the first 5 years, apart from the capital, you see a fair amount of advisory fee, and then one day we said, okay, we don't need it, and then we actually put it back, saying that now we are free. But the support was so phenomenal. So it's a little different approach to a lot of other companies which came to India.
So time has just gone by. I'm very tempted to ask you a lot more questions, but I'm going to ask you one question. And there are two parts to this question.
Okay.
Okay. Mirae's journey has seldom been talked about. I often tell people that if there has been one case study which has never been recorded, it is basically Mirae's case study. Never been chronicled, which is why I'm asking you to chronicle it right now. The way you pulled out, you and your entire team pulled out Mirae from the issues which happened when you had launched that product. Very few people will know about it. A, because people forget very easily, and B, because you never made a song and dance about it. Okay. So I would like you to just take us through that journey. Okay. From a global parent perspective, from an India company perspective, and from an individual perspective. That is part A of the question. Part B is, what does the future look like? So part A.
I think it's very interesting that you asked this question because those were very different days. I think one part which really helps you stay the course is the vision of the promoter. And Mr. Yunjupak very candidly says, people talk long term, I am long term. I've seen that. Today, when you look at the organization at 230 is very different from the organization which was for 64 crores when I entered. We were blacklisted by investors for the rightful reason. And we were the four-lettered word of the industry, if I put it very mildly, right? And people thought I was committing suicide by joining this organization. But what I must compliment, finally, it's a business of people. And it starts with the fund management. I remember I talked to a large wealth manager and I was asked, how are the funds? I said, the funds are very good. Fund managers are very good. He said, Fit, there's a chance. So I took a call on the fund house because of the fund managers that were there and the quality of the fund manager. And I back myself on my ability to assess some of them. I'm a student of fund management of the industry. Why they stayed the course is something you have to ask Nilesh. Because the quality of Nilesh sticking by the fund, seeing it through, is what this story is all about.
Nilesh Surana.
Yes. He's since inception, is our CIO. A talent which I think people talk about his stock picking ability. I think he's a superior risk manager, right? And he's upholding the risk mental of the organization is probably one of the backbones of why we survived. And then when I sat as a sales guy and I talked with them that we need a product which will perform consistently, the confidence with which they said that they will perform is something which was very infectious pretty contagious to the team, I must say.
Very interesting.
And then you go to the market as a sales guy and you back your ability to convince people. We did not take on the full market. We played a very different playbook. We made it bottoms up. We had that simple rule. If somebody is saying yes to us, that person is premium. So it did not matter who the person was. Luckily for us, some very meaningful people across the country said, yes, we will track you. And we had some meaningful discussion. We'll come every month to tell you why our balance sheet is doing well, why we will stay in India. Because that was the question. It took them probably 1 year to track us. But by the second year, some of them started giving money. And luckily, that money created money. If you go back to those days, the industry was run on upfront brokerage.
Yeah.
Our entire book was trail brokerage. We
Achha,
impressed
even
upon-
those days.
in those days.
Interesting.
2011, we moved to trail. It was full of, I don't want to comment on other practices, but there was a lot happening, incentivizing people. Ours was pure trail. And we just emphasized on the fact that growth of NAV is growth of money. Even today, I stand in front of you without a single foreign trip to any of our distributors. When we completed 10 years in India, because it was disbelief to many, we took some of our key people to showcase Korea. You see where we come from. We're still no contest, right? But the fact that some of them chose us is something which we will always remain thankful, because they had 40 choices.
Correct.
And here was a company which in the papers was being said that it is getting sold.
Yeah.
Why would they? So the call was theirs more than us. But the fact is, if they gave money and the money held up, was something which we put on the table to be fair to our fund management team. To be fair to the sales team, they maintained a straight line sales practice for 3-5 years. We didn't budge from our pricing and anything, just kept it very simple. Build track record, showcase 2 products in the market, back the conviction that these products will perform. Every quarter, explain why our position is good in the market and not go the debt part. Show conviction. At that point of time, people wanted longevity and conviction from our side. I would say we dared to do that, which is a little bit of a, because at the beginning you said we launch all products, pata nahi kaun sa. We didn't say that. We have 2 products and we said these are good products. And then to be fair, the fund management held good. So with a period of time, then I think after 4 years, we were some 2,000 crores. But I'm asking you the question, since you worked with Global Asset, how many promoters will celebrate 2,000 crores? There was celebration in Korea when we hit that 1,500, 200, when we broke even. We broke even at 660 crores. And that is what the Korean knowledge to me is. The way they approach cost is something which was alien to me. It's incredible how they can just cut down the balance sheet in half an hour and put things in place. So a lot of learnings, but more important, I think the people who trusted us then, it's true that we made good their trust. And that is why today also the fair amount of trust, when you say that so many investors, it's still surreal for me that this many retail, that we'll be a retail fund house is something which we had never thought. And then we remain thankful for that.
Very interesting. I'm just thinking aloud. The fact that you said that you will give only trail was actually another thing to show that I'm here for the long term.
Yes, absolutely.
Yeah.
Well said.
And if you look at what is happening out there today, there are direct plans. Okay. Now there's digitization of distribution, wherein it's become more impersonal. So in a way, probably you had without even realizing it, the first mover's advantage.
I think if I have time, I'll narrate one more part of the interview. I was asked this question: how long will it take for a product to be known in your entire country? In 2011. And I thought that question was out of the syllabus, so I flipped it back. How long will it take in Korea? And Mr. Kim said, half an hour, 45 minutes. I said, how? He picked up the phone. I have everybody's phone. And that's when I realized that the future is more digital than physical. So if you see our sales team, we are probably still the smallest sales team in the market. We rode that digital part. And that was possible because of the performance the funds put. So what we see is democratization of the investor's choice. And then we were addressing one banking platform, and the question was, why are digital players bigger than the banking platform? And somebody, and I'll share that view, is that you chose products for the clients. The digital platforms were agnostic. They gave the choice to the clients. Think about it.
Very nice.
It's very deep, right?
Very, very deep.
But that's why probably the investors are more confident there than with you, right? And to look at that part and the digitization, the ease of transaction, everything, the way they've grown is just phenomenal. But to be fair to us, I think if you look at the first growth, and you can check with all the digital partners, by choice, we played that card, to be fair to us.
Yeah, so I'm just saying in hindsight, it turned out to
Yes.
be ahead of the...
Hindsight, because of that interview, he showed us the way.
Yeah, very interesting. And the last part is going forward, what... So I believe if I'm a global player listening into today's discussion, I have a very different perspective now of the Indian market, because I've heard somebody in the play right now talk about it. But going forward, 10 years, 15 years from now, this is what you've just spoken and what you're doing. If you could just share some quick insights, how do you see things playing out?
I think for me, Mirae is a case study. And more than working, I learned from here. And how a long only scheme in Seoul, we were the first mutual fund of South Korea, how a long only equity scheme can become a global investor in 28 years is a case study. Something which we are trying to emulate. It's a business model laid down there. So the mutual fund business per se is an annuity business. What do you do with that money that you make? One way is to pay the employees. Our way is to build businesses. So if you look at us starting, we were also quite similar. What was Mirae Asset Opportunities Fund, which is the large cap fund now, I will replicate with the Hinju Park #1 fund, say in Korea. Today we have at least 15, 16 businesses out of that. We have all the verticals of Mirae in India. We have the asset management business, which is global investments. In the asset management space, we have the mutual fund core business, which is the active. We now have the passive side. We have a fairly decent venture capital business in India. And then we are incubating a real estate business in the AMC. We'll hive it off as we speak. And then we build a slightly bigger book and we'll hive it off. We run a very interesting indexing business in Gurgaon, where we create indices for the rest of the world.
I saw, that's brilliant.
Yes,
I mean,
yes.
so many indices now you've
Yes,
launched.
and with the hope that to be an index player in India too. We have the securities side, which is Mirae Asset Capital Markets. We just acquired Sharekhan. And then we have both M-Stock, which is the discount broking, as well as the physical broking. We are not choosers. We'll put both in front of the people, let them choose. Like in the manufacturing business, we are sitting in front of you with active, passive, venture capital, now SIF. You choose. Our job is to manufacture. So the point I'm making is now we're 16, 17 years. The pace we've set for ourselves in building businesses is fairly strong. And that's just a copybook of what the parent does. But at this moment, when the parent is talking from ETFs is moved to, say, covered calls and now talking token, the risk we carry is, are we a little behind as an environment, is something which we are reflecting on. So as a counter to that, and the best place to be is in the gift city, where single regulator, we can do a lot of talking, and of course in Dubai, in the IFC. So those are new businesses which we have formed to be aligned with the rest of the world till India does not change its regulatory framework or the way it functions or the way it approaches the business. Again, I'm not saying that is right or this is wrong. This is an environment that is an environment. So we'd like to make all plays. So how to convert a long only equity scheme into various businesses is what Mirae has taught us, and then we're just going about emulating that. And I feel that, our first phase of the business is done. I think as we go into the next phase, and this country is now changing so dramatically, both on the economic front, this will be the largest country of family offices registration, means it's not a poor country anymore, and the young are earning far better than what we used to earn. The prospect of being an asset manager as well as a wealth manager is incredible in this country.
Very well put. This is a good summary of things. Swarup, before I let you go, I think there are some young minds here who want to ask you some questions. They've been itching to do that, and we've just gone on and on. I can continue for another couple of hours.
I can do it.
So my question is, from the recent news that Mirae Assets Global have recently won an award at Global Prize at 2025 Asia Capital Investments. So my question is, how does this recognition influence Mirae Assets India's positioning, and what are the role the India play in pushing Mirae into this global top 25?
See, all recognition and awards are an outcome, right? They're just ratification of the fact that you are on the right path. It just, what can I say, encourages us to remain on the path. You can't get carried away by awards, but you feel happy when that's a global award more than India award. But it helps that we are owned by a fund manager. Our chairman, Mr. Hyunju Park, used to be a private equity manager before he started this organization. And that's why our fund management is always held very closely, right? And it's a young organization, but such awards encourage us, but it does not deviate us from our path and only strengthens our path.
Good afternoon, sir. So, my question is, what is the misconception about the mutual fund that you wish to be correct?
Yeah, I think first of all, I think more than mutual fund, there is a misconception about life. That your most important need in life is investing is still not there in people is something which I fail to understand. If you check my Twitter profile, it reads that I'm a very sad equity seller because people are not realizing. People find it worthwhile that it is important to buy a phone, and nobody has to tell them that. But that you don't have to invest after 30 years of doing this work, I'm still not able to convey, means I'm still not doing a work properly. So more the mutual funds come later. I think first the needful to invest, if people like us can, incorporate in some lives, it will be job well done. I think that is first, and then comes mutual funds.
Good afternoon, sir. Myself, Chaitanya Bhanushali. Well, my question to you was regarding, as you have worked in a Korean region as well as Indian region. So, wanted to know what are the business mindset of the Korean and Indians. The comparison I wanted to know about.
Yeah, I think a very interesting question because they're two different people with different thought processes. The way I look at it is they're very absolute. They're yes, no. They come to decisions very quickly, which over a period of time, I think some amount of it has come into me. It's one of the best things that could have happened to me. Second most important is they are very unbiased. They don't carry bias for it. They are open to more ideas. They are open to more possibilities. And then they see things on the merit of the business rather than any, emotion of the business. They leave business as business, something which I think we Indians can do better. So at the same time, we Indians bring a lot of empathy to the business. Is my observation. I think if one marries both, the result can be very, very good. And our objective in India has been to marry both, to understand the ability of swift decision making from them. At the same time, keep some factor of empathy to the humanness of the whole thing.
Good afternoon, sir. I'm Roshni Prajapati, and it's really grateful to hear you. And my question to you is, as a student, what should be our mindset for long-term achievements, like in investment point of view?
See, I think it's a very, very important question. I was hoping that somebody would ask me earlier. See, investing is about life. What you desire from your life is known to you. What I desire from my life is known to me, right? What goals you set for your life should be the means of investment. And the closer you bring investment to meaning your life or fulfilling your life, the better your journey will be. Now, what goalposts you put in your life may not have any correlation to my goalposts. Hence, it is called personal finance. It is personal to everybody. First thing you should do is put your life journey ahead of you. And that is right for you. Like Vikas sir asked me that, I have interest in music. The amount I spend for my music system is illogical to many. But that is my life. Okay? And it's my money. So I'm right in my way. But what you put for your life is most important. Before investing, I would really request you to write down your goals for life. They can change. But till you don't write down, you will not know why you will invest. If you do not know why you will invest, you will never know where to invest. First, write down your whys. Then you go and look for investing, because 9 out of 10 times that why is not defined. Hence the investing becomes return chasing, mindless investing. Suppose you want high returns, define what is that high return. If you say 30%, then I will say there's a very good thing called Uber. Take an Uber here to the race course, you will get it there. You will not get it here. You will then get to define what is feasible, what is. Sometimes it will also make you realize your goals are feasible or not. There's that much money, and there's nothing wrong to not realize that. I mean, realizing that. And then you build your life. Sometimes when the goal changes, then your portfolio also changes. But first do that. Investing is still far away.
From global to Indian, from investments to insights, from processes to personal finance. We spoke about it with Swarup Mohanty today. This has been an exhilarating session for all of us. Hope you enjoy seeing this as much as we did bringing it to you. See you on the next episode of MF Chronicles.